Dogecoin, that one's weird. I'm not going to make any calls on Dogecoin. That's just would be a mistake in the making, because as soon as you say something about it, it does the exact opposite.
It's June 20th, 2024, and this is Markets Daily, a show where we get into the minds of some of the smartest investors, CEOs, analysts, researchers, and anyone who has a smart or hot take on the crypto markets. Now, before we get into today's discussion, let's take a look at what's making news this morning. The Sol ETH ratio hit a 3-month low, declining 35% in only 1 month. Crypto analysts think that the decline puts the bears in control and further losses could be on the horizon. The crypto market's biggest meme token, Doge, is also starting to attract short bets amid a general decline in the meme sector. Coinalyze data shows that Dogecoin funding rates have started to turn negative, reaching levels that we haven't seen since October 2023. And some more positive news now, the VanEck spot Bitcoin ETF has gone live on Australia's biggest stock exchange, the Australian Securities Exchange. Joining us now to make sense of what's going on in the markets this morning and what's to come is Tactive Wealth Advisor Eddy Gifford. Eddy, welcome back to the show.
Yes, thank you for having me.
Of course, it's great having you here. We got to make sense of what's going on in the markets. Now, they are historically boring during the summer months, but there's a little bit of uneasiness, it feels, given some of the headlines I've just unpacked. Curious to hear what you're watching and what you're thinking about this morning.
Yeah, the old Wall Street adage, sell in May and go away. That's exactly what it's there for, because the summer months typically just don't do a whole lot. And then September is typically not very good. And so it's not until October where things start to get spicy again, so to speak. Of course, this year we got a lot of stuff to think about because the Fed just came forward and said, hey, we feel like we're making progress on inflation, but we're not going to cut until December. The bond market's not so sure. It's been reacting. Rates have been falling on the long end of the curve, which is telling us that the market thinks that something under the surface may be cracking or breaking. And even when you look at the cryptocurrency space, you already kind of mentioned it this morning, but we've seen a lot of the true like risk on altcoins getting beat up. And we've seen Bitcoin just like stuck at this like 65 to 70 level where it just can't seem to break out. Hopefully it doesn't break down. But if the retail numbers from last week are any indication, it's kind of telling us that, hey, recessionary measures may be around the corner. And if that's the case, cryptocurrencies haven't been through a recession yet. And so it's one of those things where, I would say that it's a great accumulation opportunity. But if I think volatility is crazy when things are good, imagine how bad volatility could be when things are not so good. So there's definitely a lot of uneasiness out there. Doesn't mean that you should stray from your plan, but it probably means that you should maybe tighten up your stops a little bit or pay attention to your exits just in case. I don't think that anyone's going to be sad or mad if they buy Bitcoin today and close their eyes and don't look at it for 10 years. But they could be sad or mad if they look at it in 10 months. So we just have to be aware of that anytime we're buying a volatile asset class. It doesn't matter if it's Bitcoin or if it's NVIDIA stock, for example.
Unpack that a little bit more for me. We talk about, things starting to look like they might be cracking beyond the surface. Economists have been calling for a recession for a really long time, but it seems like, we've been able to stave that off. Along with, maybe a black swan event happening. The economists have been calling for that since COVID-19. So what are you watching? What are you expecting to happen? And how do you advise people to prepare their portfolios in case of a worst case scenario?
Yeah, I think that when you look at what's happened over the last 3 to 4 years, obviously you mentioned COVID and everyone called COVID the bear market, but I think that COVID was a blip. I don't think that was a true bear market. I think that we're still in the bull market that started in 2009 for the broad market, and we're still in a bull market for cryptocurrencies. Obviously, like we've seen significantly more volatility in that space, but we got to remember we had all that money come in the form of stimulus, and 2022, where everyone was calling the bear, I would say that's more of a give back of COVID gains. We borrowed a lot of gains in 2020 and 2021 with all the free money, and in 2022 we kind of gave it back. So I'm not convinced that we've actually entered a bear market. And so that's where we're paying close attention to your typical intermarket risk on risk off relationships. And that's your gold versus the broad market, for example, or your high yield debt versus the treasury market. And the other one we typically look at is utilities versus the broad market. Of course, I think that cryptocurrencies and the electrification of the world has kind of messed that one up a little bit, because we've seen just such an increase in demand for energy that we can't tell if it's because more people are more companies are mining, or more companies are building electric whatever, or if it's actually kind of a risk off trade. So it's a little bit trickier now because of the energy demand when we're looking at the typical like risk on risk off scenario. But I think that we're seeing slowing. We're seeing where it's one or two or three things that are driving the entire market. I mean, I think you can make the argument that that Bitcoin is holding up the cryptocurrency market, and that Nvidia is holding up the stock market. And if either one of those kind of break their uptrend, we could see things accelerate to the downside really, really fast. So I think that what you have to do here is you just have to stay flexible. You have to stay nimble. And you have to stick to whatever your strategy or plan is. If you're a buy and hold person, you shouldn't be looking at this for 10 years anyways. But if you're more of a trader, or more of a tactical portfolio manager, you need to make sure that you've identified where the trend breaks and you have that exit and you stay disciplined, and you do that. And then just make sure you got stuff in the portfolio to offset that risk, so that you have some insulation before things break. And if you can do that, you're going to be in a situation where, at least on the other side of this, you'll be better off. Not saying you'll be like in a great scenario, because if all the markets fall by 50, 60, 70%, which, yeah, I mean, the bigger the bubble, the worse it is when it happens. And we don't know when that is. But if you're in a better spot, you have more capital, that gives you the opportunity to buy more stuff on sale. And that's where it gets really, really fun as an investor, or as an advisor in my case.
I like looking at things on sale. It's an optimistic look at potentially a bad situation for some folks. Now let's talk about that downside a little bit more. You just said that you think we've been in a bull market for a lot longer than some of the other folks I talked to on this
Mhm.
show. If we do head into a bear market, if recession does come, if we do see a catalyst that sends markets kind of diving down further than we've seen in a while, where do you think that takes us? It sounds like you think it takes us lower than what we saw in 2022.
I think it hurts. I think it hurts bad. I think we're I'd say no less than 30%. 30% is kind of like the optimistic view, based on the amount of time that we've been at zero interest rate policy. We could totally see like a 50 to 60%, like we did during the 2008, 2009 financial crisis. I really hope that we don't see like a dot-com bubble type in the technology world, because when that occurred, that was an 83% drawdown from top to bottom on the NASDAQ 100. And as we know, cryptocurrencies tend to track technology because they are technology. So that would be rough on the cryptocurrency market. I think the good thing that would come out of it, though, is we could get rid of a lot of the call them useless altcoins, and kind of have like a consolidation into the survivors, and that the survival of the fittest, if you will, and have the opportunity to make a lot of money on the other side. So I think it could get really bad, unfortunately. I hope it doesn't. But we're in this situation where everyone's saying it's different. And every time that we see these types of scenarios and it's different this time, it's when you fast forward 2 years and everyone's just like beat up and they're looking back, they're like, oh my gosh, all the signs were there. I can't believe we didn't see it. Well, that's because everything was different, remember?
Well, if it does happen, I hope people look back at this interview and you can say, you at least warned some people of what was to come. Although I hope that it doesn't happen. I like to stay
Yes, you and me
optimistic
both. We
here.
don't want to see minus 50, but
No, I
we have
really
to
don't want to
understand
see
that
it.
it is a potential
Mhm.
scenario, and just have to be ready for it, because everything is either an opportunity, or it's it, or it's a mistake. I mean, you're in this
Mhm.
situation where I could run from it or I can run into it. And, we prefer to run into things because that's where you usually find the best valuation opportunities.
Yeah, it is really all about being prepared and following your strategy. Talk to me about those altcoins now. You said that we may see some drop off. It will be survival of the fittest. Are there any particularly strong alts that you're watching?
Well, you did mention Solana this morning, but I think that that one's fine. Dogecoin, that one's weird. I'm not going to make any calls on Dogecoin. That's just would be a mistake in the making, because as soon as you say something about it, it does the exact opposite. I think Ethereum is here to stay. Everyone's still telling me that the XRP is the future, but I'm not so sure on that. But those are still kind of like the core technologies that we would say, hey, those would be the ones that would survive a crash, if you will. Some of the stable coins, potentially, if they actually remain stable, of course. Anytime that you tack on a name like stable to anything and then you watch it go down by 50%, people don't think they're stable anymore. So those would be the core that I would be like, hey, if we're going to hold something, if we're going to hold a portfolio of coins, Dogecoin is obviously the okay, we're swinging for the grand slam. That would be like the smallest portion of the portfolio. Bitcoin would obviously be the largest portion of the portfolio, with probably Ethereum second in line, and then Solana, and then Ripple after that. So if we were to kind of assign weightings, we would say Bitcoin, then Ethereum, then Solana, then Ripple, and then a little bit of Doge, just in case things go insane like they did in 2021. We could accidentally make a 100x on our money, and that's nothing to complain about.
A little bit of Doge to keep things fun and a little
Hey,
weird, right?
exactly. And when it comes to investing, like you always got to have your outlier, and you got to have something in there that could really pop. And that thing just keeps defying the odds. So we'll see.
Now, I'm curious if you've been following any of these PoliFi tokens. A few days ago, we talked on the show about the DJT token. It was rumored to be issued by Trump. Those rumors have not been confirmed. Then there were rumors that his son Barron was behind the token. We've seen a lot of these kind of popping up ahead of the elections in November. I've asked a few people on the show this week this question, but are you surprised to see crypto taking an active part in the upcoming elections and having kind of these spin-off tokens to make bets on who might win?
It's the nature of the beast that the everyday American, the everyday investor is always going to look for something, or anyone is going to try to put themselves in a position where they can have an edge. It doesn't surprise me. This is obviously for a lot of people, like on both sides of the coin, no pun intended. People are very, very, very divided, and so it's like whoever gets elected, it's the end of the world for half the country, and because of that, we just see a lot more investors leaning into these things. So it doesn't surprise me that whoever's creating the tokens are also trying to take advantage of the situation, and it's unfortunate, because I don't think that there's going to be any long-term advantage that comes out of it. But if the opportunity is there, and people are willing to bite, then people are going to throw that line out there, and I would stay away from them personally. But it doesn't surprise me, because this is a big, big, big election, and this is this is a rematch, so to speak. It's another heavyweight battle, and I mean, I say that the United States of America is very resilient. It doesn't matter what happens. We always find a way to work through it, no matter what side of the coin you're on, and we're just gonna have to see what happens. We're gonna have to move and adjust from there. If you can take some bets around the way, and you're right, great. Just make sure to take some of your gains off the table. I live in Las Vegas, so we know that if you're up big, go ahead and put some money in your pocket, because you can still have some fun with the rest, but you can go home and not be very, very sad when you wake up. So.
Wise words. Now, the last follow-up question I have for you, Eddy, is on the comment you made about stable coins. I'd love to hear a little bit more about that. It sounded like what you were saying is if things do take a downturn in the near future, some stable coins might become not so stable. Can you tell me a little bit more about that and what people should be aware of?
Yeah, I think a mistake that a lot of investors made during the financial crisis was they just assumed that safe meant safe. And we saw money markets, which were never, ever, ever, ever supposed to go below a dollar, go below a dollar. And so if we end up in that like worst case scenario, I don't know if money markets go below one again, but I think the stable coins actually end up getting beat up in that scenario just because they're so young to the game when compared to some of the other options that are out there. At the end of the day, everything in investment comes down to supply and demand. So if everyone's taking their money out to throw it into whatever else, that's going to take the stability out of things in that situation. So again, I hope that doesn't happen. I'm not hoping for that. I mean, if it happens, we're ready for it. But I like to see all these markets just kind of continue to climb this wall of worry, so that the everyday American, the everyday investor all over the world can be successful because that this is kind of like their only shot. It's not like they have money to burn like the uber wealthy do.
Eddy, thanks so much for joining the show. It's always a pleasure.
Appreciate it. Thank you.